Welcome to Drill Down Earnings. We have third quarter results. No, we have first quarter 2025 results. That's the way Lam Research does things, with a new fiscal quarter beginning here with some interesting results. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. When we look at these results, of course, Wall Street likes a beat or a miss, and this was a beat. But let's dig a little bit deeper here in what we actually got from this company. So in terms of revenue, $4.17 billion. Really nice margins, gross margins at least, of 48%. Pretty impressive from a company that makes really big, expensive stuff. Net margins, if you will, net income margins, operating income margins, I should say, EBITDA margins of 30%. Again, really strong for this business. But maybe most importantly, revenue was up 20%, and that's really good for this company. And indeed, it's good because we seem to be coming out of this cycle where semiconductor test equipment is so important here, beyond the world of AI. Remember that we got confusing results a week ago. We had ASML telling us that things were not getting better as fast as they thought, specifically citing automotive. Then we had Taiwan Semiconductor coming out and say, no, things are actually doing really well, especially in terms of AI. And then we had Texas Instruments come out this week and say, yeah, automotive in China is actually doing really well, and the rest of the world's okay. So what do we learn from Lam Research? Well, more good news in the semiconductor sector here in terms of semiconductor manufacturing equipment. But interestingly, China is important to Lam just as it is to ASML. So we're going to get to that in a second. The two businesses for Lam Research are systems, which is selling these big machines, and customer support of those systems. And while the systems business continues to dominate at 57% of revenues, that sticky customer support revenues really help this company keep going during a slowdown in revenues in in system sales. So while system sales dipped at the beginning of the fiscal year, and even into this calendar year, you saw that the customer support numbers stayed steady, allowing this business to continue to thrive while they prepared for a rebound. And that rebound is now here. The systems business saw a 16% increase in revenues on a year-over-year basis. And as I mentioned, their EBIT margins have been really steady, now at 30%. So how'd the stock react? Well, the stock went straight up when the numbers came out and stayed there during the conference call. Stock up 5% in after-hours trading, and indeed up 22% for the year. So down off of the highs of the year, but the business seems to be doing quite well. Also interesting to me, now I mentioned China. The China business has grown to be a very large percentage of their revenues, and it is holding. It's not growing anymore, but it grew a lot at the beginning of this year and is still holding. China's spending every dime they can to build up a semiconductor business, even as export controls start to control what can go into that country and what they can do to build the chips and the AI systems that a lot of the rest of the world, the United States especially, does not want to see China develop. So we heard from CEO of Lam Research, Tim Archer. Here's what he had to say in the conference call.
I think it gets lost when we talk about percentages is, we talked about a tremendous number of technology inflections and investments during my prepared remarks, none of which would actually be occurring in China as a result of the either restrictions already in place or the technology nodes that they're at, or the fact that, again, NAND, for instance, for us, those upgrades would be generally occurring outside of domestic China. The nodes like Gate-All-Around obviously are outside of domestic China. And so, when you think about percentages, the stronger those trends are for Lam and for the industry, then naturally that's why we would see China continuing to trend lower as a percent of our total revenue.
All right, that's what Tim Archer has to say, but what do we have to say? What's our big drill down earnings takeaway and the one number that tells us a whole lot? Let's get to that summary. So a summary of Q1 2025 results from Lam Research shows us a business that is growing nicely at 20% year over year, now up to $4.17 billion. But I thought the most interesting thing in these results, the drill down earnings bite, the one number that tells us a whole lot, is 39%. 39% of revenues for this company coming from China, despite the export controls trying to restrict the way companies in the US like Lam or in Europe are able to sell into China. China's still buying a lot, including 39% of the revenues this quarter from Lam Research. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson.